Ghoor Thakur, who's the head of distribution and strategic alliances, Mirae Asset Investment Managers. Hi, thank you so much, Suranjana, for joining us. Suranjana, if you look at the numbers, there has been a decline as far as the net equity inflows is concerned, almost a decline of 19% on a month-on-month basis. Now, there was a very interesting report last week by ICRA that said 27% of retail investors are now opting to invest directly instead of going in for mutual funds. What exactly could be the reason in this decline? Because there is a decline coming in on sectorally also. Large caps, mid and small caps, they're all seeing a decline in investments.
Yes, hi, good afternoon. I think, as you're mentioning, I think equity inflows obviously have seen a bit of tapering down. I think that 19% has reduced month on month. But if we look at the deep diving of the data, then what has happened is the flexi cap category, which is actually becoming a very mainstay category for investments in the capital market. I think that is a segment which continues to get pretty decent inflows. I think what has also happened is the sectoral part has continued to get some inflows, while there was one point in time where the sectoral inflows had really skyrocketed with a lot of NFOs coming in. This part has now calmed down a little, which is a good thing because, the chasing of returns which was happening in this segment is now calmed down to a certain extent, and it's been leveling up now. But as you rightly mentioned, I think the small cap, the mid cap, and most of the segments other than the flexi cap have actually lost money this month in terms of net inflows. I think the quantum of money has gone down. I think what has also happened is large cap as a category. Also, if you see, there is a substantial dip which has happened in the net inflows. I believe what is happening from the investor point of view is that whenever there has been like sideways market or there's been a little more uncertainty building up, there is certain amount of profit booking also which is happening. And the other segment is where people are probably taking a call that, they have seen a certain amount of upside and they would want to, wait and watch for some time. If you see the hybrid inflows, that actually tells you a story as well, that the multi-asset as a category continues to see an upside. But what is happening is probably the arbitrage segment, where investors tend to build in assets to redeploy later into equity when there are, good corrections in the market. That's a space which is building up again. So hybrids as a category, if you see, there has actually been a good decent upside that we've seen, but most of that money is actually coming through the arbitrage segment. The passive segment continues to see good inflows. I think the passive index products have seen again about a 22% upside, and gold has continued to see inflows in the range of about 7,000 crores, which in the last 3 months has been around 8,000 crores. So I think that interest in gold, or rather in gold doing well, and therefore people building up in their portfolio, that continues to remain. SIP flows is the encouragement. I think while there may be a downside in the equity flows, the SIP long-term commitment of retail investors, they've stayed committed, and which is how it should be.
All right, and that was exactly my next question with respect to SIP inflows, which continues to sustain about that 29,500 crore mark. Despite FII selling and FII exodus over the last few months, domestic retail inflows continue to remain very strong. Your thoughts on where the SIP flow and figure could inch higher by going forward over the next few months?
I think if you see the SIP numbers, actually they have been continuously growing. So it's a very encouraging thing. As you mentioned, what has been happening in the Indian markets is probably while, there's not been very large quantum of FII flows coming in, because in comparison to a lot of other emerging economies, India was a little expensive. Now probably the valuations have leveled up across, which is where going forward, maybe once the Fed rate cuts, etc., happen, we can probably see more inflows coming towards the emerging markets, and where we will get our fair share. But what has structurally been changing is probably the DII flows, which has been not just blips in the market, but it has been very consistent flows, and which is what is supporting our market. One other thing which has also been happening, I think the NFO flows also which have been happening this month also, I believe there have been about 18 NFOs in the market, which has collected about 6,000 crores. So, which is where new product launches have been proliferating. Our thought process is that while there could be a lot of new ideas coming into the market, it's always important from the investor point of view to assess what is important in their in their portfolio as per the risk appetites that they have, and not just follow trends because something looks attractive at that point in time. So I think SIP flows staying intact long term is very encouraging. The fact that we are maturing as investors, the fact that we are recognizing that long term wealth creation, also compounding, also has a very large role to play. I think people are understanding the merits of staying invested long term and not just timing the market, but staying invested in the market. I think these are all encouraging signals. And while we can see a little bit of upside and downside in the net inflows in a month, I think SIP book staying intact is a good signal overall.
All right, Suranjana, thank you so much for joining us and weighing on the numbers. So SIPs, hybrid funds, and flexi caps are the flavor of the investors. It remains the investment strategy amid a volatile market.